Good morning, everyone, and welcome to this episode of Derek Invest. I'm your host, Derek Miller. What we're going to talk about today are the 10 most discussed stocks by professional traders. So right now, especially after yesterday, Nasdaq had a 3% down day. S&P was 2+%. I'm not sure what the Dow was. I actually received several emails yesterday asking about whether it was time to buy, what to do, so on and so forth. So I thought this would be a good time to take a look at some of these positions. So semiconductors, stocks related to AI, and tech are very obvious positions right now that are in play. But there's another one that popped up that I was shocked about, which is ULTA. Since Berkshire Hathaway took a large uh, share in that company, took a large position in that company, apparently it's been the talk of the town. I had no idea. So we'll take a look at ULTA. So we're going to take a look at, some of the usual suspects. So we'll take a look at NVDA, Meta, Amazon, Google, Marvel, AVGO, Apple, Tesla, and ULTA. We'll probably take a look at NVIDIA first. I had a student ask me about that yesterday, making some really good points. But I want to bring this up. I'm bringing up this student's question because I was sent the question via an email, and it had the picture of NVIDIA's chart, which was fine. But it was a daily chart, and it was asking if now is the time to buy back into NVIDIA. Now, this is why I'm always preaching that you have to have an investment plan established with established rules based on investment risk, cash, and investment management, cash management, and risk management. And what I mean by that is you have to understand how you're evaluating the position, how much risk is within the position, and how much cash you should be putting to play. Because the way the question was frameworked, there were several problems. And the one being, we're looking at a daily chart and then we're asking about a short-term entry. A short-term entry would never be taken based on a daily chart. A daily chart is for 6 to 18 months forecast. So if you're forecasting out 6 to 18 months, you're looking at a daily chart. So that's not a great chart for an entry. Okay, so there's your first problem. If you're looking at the wrong time frame when you're evaluating a chart, you could have everything right and be dead wrong because you're trying to evaluate an entry based on a long-term forecasting picture, story. That's what I call charts. They're the story of that particular position, that particular market. So you're looking at a story that's talking about, 6 to 18 months from now, and you're trying to apply an entry into that position based on the wrong time frame. That was the first thing. And then the second thing is now a good time to buy in? Buying in is never done all at one time, everyone. I hope you realize that when you manage money, and in this case, it's your own money, so the most important money in the world to you, you're not just buying into a position. You're scaling into a position. So you're buying pieces of a time. You expect it to hit this target price. You're at this target price. You're going to do a little math and figure out how much of your portfolio should be going in based on how much the price move is. Sometimes you get all the way to the target price. Sometimes you don't. But if you have good forecasting, if you have proper forecasting, you have proper risk management, which is going to give you target prices to the upside and the downside. You're reasonable with time frame. You have good cash management, and you're investing in investments that make sense for you. You're pretty unstoppable. You're pretty unstoppable once you put that all together. So the reason I bring this up is when I provide this information, when I go through these positions, you have to understand something. How much are you putting in? When are you putting in? Are you evaluating at the right time frame? Is this in the long-term portion of your portfolio, the short-term portion of your portfolio? How much of your portfolio should each be? Is this an investment that even makes sense for you? There's a lot that goes into this, and that's why I talk about my one-on-one coaching all the time, because when you come out of my one-on-one coaching, it's traditionally 40 weeks. Sometimes we'll double up on some of these sessions, so it'll be less, but then you may go away on vacation or holidays or whatever it is. And so sometimes it gets stretched out. But when you come out of that program, you have something built for yourself that you can use for the rest of your life. Now, you'll make adjustments as you go, because not only are you going to improve in your investing and trading, you're going to improve dramatically, which will probably, quote unquote, increase your risk, because you'll start to realize that risk is not really risk once you understand what you're doing. That may make no sense to you, but it would eventually make perfect sense to you. What someone might call risk, you call the safest bet in the market at that time. So those things are going to change, but you have a starting ground, and you know what time frames to associate with what you're doing, right? Is this if you're looking at an entry, what chart should you be looking at? If you're looking at an exit, what chart should you be looking at? If you're going long term or short term, how do you'll have all of this when you go through the one-on-one. So anyway, I'm done with that. I just wanted to briefly acknowledge that question and why all this information you're receiving. It's great to receive information. I love it, right? It's amazing. Like, everyone knows where all the order flow is and where the orders are, and everybody understands. You can now chat GPT if you want to know the last bubble versus this bubble. You can use chat GPT for quite a lot of economic information, so that's no secret anymore. The problem is, if you don't know how to put that information together, it really is truly useless. It's not going to protect you from anything. Information is just information without structure and understanding. Okay, let's move on. So I want to look at ULTA first, then we're going to look at NVIDIA, then we're going to look at Meta, then we're going to look at Apple, then Google, then Marvel, then AVGO, then Amazon, Tesla. All right, let's take a look. Let me share my screen with you. There we go. ULTA. Now, one of the things you want to do when you're evaluating anything, everyone, is you want to look at the underlying index, okay? When I say you want to look at the underlying index, hold on, we're not going to do that at the moment. When I say you want to look at the underlying index, like, for example, when we get into NVIDIA, when we get into some more of the tech-heavy stocks, what we're going to want to take a look at is the NASDAQ, what it's doing, and where we think it's headed, because that has bearing on where price is going to go in those positions. Now, when we look at ULTA, which I believe is part of the S&P 500, you can see there's a gap on the S&P 500 sitting down at 544, 545. We're at 551 now, which that's only 1% in the S&P. However, go back to ULTA here. It can equate to much more than 1% for a company like this. Now, let's zoom in on this thing. So you had a gap up, that gap filled on the way down. See this giant gap? This on a monthly chart. What do I tell you all about gaps on monthly charts? That is an indicator. If you were buying this at anything above 426, you were out of your mind. Out of your mind. Now, let's take a look. This is definitely an outlier as far as volume goes, trading activity. This is definitely institutional investors. This is last month, August. I mean, it's it takes you all the way back to, there's a couple in 2012, 2014, 2020. Anyway, it's one of half a dozen pieces of volume in the last, 16 years. So maybe there's 8 to 10 volume bars this high, trading activity that's at this level in the last 16 years. This is worth zooming in on. Let's head to a weekly. Okay, so here you are at the highs. Look at that volume. Now, that volume is right down there at 422 after the fall, because that looks like where this is being accumulated, or at least starting to be accumulated. 370. That's where the accumulation began. Let's go to a daily chart here. All right, let me see. Yeah, okay. So as you can see here, there is a monstrous gap that takes you all the way back down to 333. So this is, without a doubt, your downside. Your downside is 333. Whoop. Right there. Your upside is 500. So this is certainly definable, right? That's certainly definable, no doubt about that. What we'll do is we will zoom in. I just want to change that to Reb. I want to make this red as well, just so it's easy to see. Okay, so this is certainly definable. All right, we have 333 and we have 500. Today we sit at 361. So let's go ahead and make sure we notate that we sit today. We sit today at 361. This is going to be a good stock to have looked at. I know a lot of you may feel you're not interested in this, but I can tell you already that would be a huge mistake. If you're not interested in this, you are making a big mistake. Now I'm going to stretch this back out. Now, why did I do that? Because I needed to see where this gap was, and I couldn't see it with the volume and the way it was. All right, so let's go ahead and zoom in. We're going to zoom into a 4-hour chart. There's that 500. Look at that volume back there. Look at this. Look at this volume occurring right now. After how much of a fall? From 580 down to 320, 315. Almost 50%. Almost a 50% market drop. Now you have all that volume stepping in. Now, as you can see, there's a gap here that fills, and there's a big gap below us. Do we believe that we're going to have to come here first? We most certainly do. Here's a gap on the way down. Look, it fills. See that? Here's your gap. Here's your fill price. Comes down, gap up, up, gap down. Has this filled? No. Is this a ton of volume and trading activity? My goodness, yes. Does it traditionally, would this be retested? Would you come back down into this 333 area? Traditionally, yes. Where did it get to? It got to a low of 342, which is pretty darn close, but you would still look at this as your possible downside. You would still, if you were going to go long right now, based on that 500, you would still plan to scale in from 361 to 333. Otherwise, you're making a huge mistake. Why? You're ignoring information. That's why. This is a 30-minute chart. This is a gap down. Gap fills. We should see a reversal back to 333 before that move to 500. Now, as you can see on a 15-minute chart, all of a sudden, what has happened? Well, that gap has disappeared. Let's zoom into a 5-minute chart. 5-minute chart, this has filled. This should reverse. We know that 333 is sitting behind us, but what did I say? We have to be at a 30-minute chart to get there. You're looking out 4 to 6 weeks. That's what this is. Like it or not, this is a 4 to 6 week time frame. Right there. Can it happen faster? Sure it can. It can happen much faster. But the likelihood that it happens faster isn't great. Odds are that's how long it's going to take. Now, what are we looking at? ULTA. This is a great one, though. You have ULTA 333. No. I like to separate these boxes. I think they're easier to see. Target date. You're really looking at 4 to 6 weeks. We're at the 4th. We'll just say October 12th, 10, 12. Nine, 4, 2024. Beautiful. Now, let's go back because there's an upside here at 500. Now, how do you know if you should be playing to the downside, how much you should be playing to the downside, and how much you should be playing to the upside? Well, you should know that. If you don't know that, if you look at this and you don't know exactly what you should be doing, you have to make some adjustments. You have to make adjustments. You are not investing or trading wisely. Period. This is your upside. I'm just going to call it 500. As I tell you, and as I talk to my students all the time, there's no reason to be greedy. 1% doesn't matter. 9, 4. I think my son's banging on the window behind me. You may be able to see him. I can't. He would be behind me. I'm not sure. He's funny, though. He jumps in these videos. All right. And now we're going to do ULTA. $500. Target date. Everybody, we are on a 4-hour chart. Target date. You are looking at year end. Now, how do you know if you should be building into this position now, if you shouldn't be? Do you even care about downside? You have to know that. That is personal. This is why I talk about the one-on-one coaching I do, or find it anywhere. I don't care if it's not with me. But if you are trying to invest and you are trying to have proper risk management, which means reduce risk to the lowest possible possibility, as low as you can get it, and you are managing your cash correctly, and you know what investments you should be investing in, you're going to need to establish that prior to making any investment. Moving on to the video. I had a student ask about this yesterday. Let's take a look. Is there anything here substantial? There was a gap back here. He mentioned a gap at 75. I'm not sure where he was looking. There is a gap down here at 95, though, but it did fill. A gap at 75. Maybe he's talking about this here. But look, this would technically, let's zoom in on this, actually. This is good to look at. We're going to go backwards. This is a good thing to look at. So he's looking at a gap at 75, so we have to keep going here. There's that gap at 95 that's filled. It's filled. He believes he said 75, so I'm still going backwards here. So I'm not sure. See, this is technically really not even a gap. See where price is? I mean, it did drop down, and create some sort of gap, but it worked through it. There's a gap up, I guess, up to 75, but that must be what he's referencing. And should that gap fill? Well, you have to remember something about gaps. I'm going to go back. I need to get back to I'll go to a 4-hour, maybe a 4-hour. No, 4-hour. Let's see. Yeah, I'm not really sure what he's referencing. Maybe this here. This is a gap, but also that would not be anything reliable because price didn't actually float through this area. It dropped through this area. It rose, yes, but it's touching the previous high. It comes down and retests the previous high. This would not be a reliable gap as far as even a price target goes. It's just not. Let's look at what's going on now. If there's anything definable in NVIDIA, because I'm not really sure. But again, that's in individual positions. Gap theory, it's not that gap theory doesn't apply. It most certainly does. But in individual positions, you have to understand that there'll be small gaps, things like this that will never fill, especially on something running the way NVIDIA is. Now, how do you know that? Well, if you know gap theory, you understand why that is and how that works. We just hadn't gotten that far. We are not into gap theory yet. We begin that on Friday with the person that I'm talking about, which will be exciting. It'll clear some of this up. There's nothing definable in the video, really, aside from up here. You're going, okay, what does volume look like? Well, there's a lot of volume down here. You're sitting, I think it came in and touched 105. There's a ton of volume. There's a gap above you. There's another gap up here at 125. You would say NVIDIA is to the upside. Whether you should own it or not really depends on your risk assessment, like of yourself. Like how much risk are you willing to take on? Because let me show you something. When you don't really have definable downside, and in this case, you really don't. I mean, your definable downside would probably be about $100, but that's not really it. It can easily pop through. I mean, the truth is, NVIDIA can very easily come back to $51. That would be your definable risk. That's the case. Like it or not, that's where it is. Your definable risk on NVIDIA is down here, $50. If you're comfortable, you have 125 on top of you, you have 50 below you. That's like the worst trade I could ever imagine. But depending on time frame, there's so much that goes into this. But if this were me and someone were just blanketly asking me, would I go into NVIDIA? No, I wouldn't. There's much better positions than this that I can make a heck of a lot more money in. Let's look at Meta. Meta got a nice price run because what's his face? Mark Zuckerberg started talking about AI, and that's where this pop came from back here. I remember when he started talking about AI, and all of a sudden it bolstered his stock price, of course, because right now with this new AI craze, which I have to tell you, I don't believe in whatsoever. Your definable downside on Meta is 385. You're sitting at 512. That is your definable downside right now. It just is. Do I think AI is what it's cracked up to be? I don't. I say that from experience. I'm dealing with Airbnb still over charges in this place I stayed in months and months ago, and we left on the 4th, and they're saying that it didn't get canceled to the 16th, and it was supposed to be canceled by the host, and that you had to pay 30 days plus the 9 days, but the host has sent me emails saying, no, there was no cancellation. Forward this on to Airbnb, have them give me a call. They haven't called him. It's just a disaster. It's a disaster. It's all chatbot and this AI stuff. And so, yeah, no, I don't think it is worth its salt yet. I think this is going to be very similar to many of the crazes. We had Tesla go absolutely nuts over electric cars in the peak of 2021, just to fall 75%, because this stuff's being driven by market sentiment, not by actual results. It's really not. It is taking away jobs from humans, many humans. And I had a conversation with someone that is trying to, they're basically running an AI business or pitching an AI business. And this also looks like selling to me, by the way. They're pitching an AI business, and they said, these are jobs no one wants. No one wants to do this. Well, I have news for you. You ask a guy that's trying to feed his family and kids if he doesn't want that job, even though that job sucks. Oh, he wants it all right. He'll take it. He will take it. But it's not that AI is all bad. It's that it just doesn't belong in certain areas. It doesn't belong in healthcare. It doesn't belong in anything associated with customer service related to money. Banking, like Airbnb, for example. This is almost a $4,300 charge that we have been dealing with now. So we got the initial issue worked out, which was a $3,500 issue. They straightened that out. Now they screwed up, and they're trying to charge us almost $4,300 for a place we never stayed in a time we never stayed there. We have a great review from the host on their platform, and they can't seem to figure it out because they aren't they. They are chatbot AI crap. It's garbage. It's garbage. Meta, would I buy Meta? No. Absolutely not. It looks to me like Meta is coming back down here. We're on a weekly chart here. Wait, does it show up on a daily? Hold on, I'll tell you if it shows up on a daily. I wouldn't buy Meta. You can't define risk in this. It's upside, downside. It all sucks. You even have this sitting down here at 403, but I would say you're coming lower than that. I would say you're coming down to 385, which is somewhere in here. Which, you could even use this. This is fine. This is where you're going to come. I don't care. Call it 400, but the reality is it's probably closer to 385. Now we can go back and we can take a look at the underlying index, as we should, and see what level of weakness we think we see there. Or if we see strength there, then obviously that means the Meta target would take much longer, wouldn't it? But I can tell you, Meta is certainly, this little pop is built on the fact that apparently Mark Zuckerberg now feels really bad for helping alter election results and stealing your information. And it's countless. I can't stand Facebook, Meta, call it what you want. That place as a company, I would, I don't and won't use it. That includes Instagram, sadly, but it's a farce. But I don't even judge positions based on my belief in the company, because what will drive price is the fact that this company operates within a business. That business is the stock market and publicly traded companies. There are structures within that. Companies, you have your investment houses, you have your brokerage houses, you have your financial advisors, your trading desk, your professional traders, and they work on mechanics. And those mechanics elicit emotional responses by the rest of the market that really doesn't know how it works. Those mechanics drive cash flow. They increase and decrease supply, which drives price up and down. That is how I make my decisions. And when I look at this, I say that I can't imagine a world where this doesn't revisit $400, because it only makes sense in line with this business, which is the business of publicly traded companies. It makes sense. So I don't know why it wouldn't come back down to that level. So don't feel that I get caught up emotionally with any of these companies. I absolutely do not. Let's take a look at Google. What do we see here? Well, obviously we see weakness. We see another gap down here at 143, 144, 145. Call it 145. Let's do something. Let's take a look at the NASDAQ and see what we see here. Now, we came down. Now, if you know anything about the bottoming process, there's a couple things you should know. So the first is this: when a market pulls off from a high, falls over 15% in the matter of 3 weeks, this was used as a fear mechanism. The mechanics behind this were very easy to see because you can see where the gaps were that had to be filled. The reason those gaps have to fill is these companies want to get the best price. So they work within a business. That business has to remain profitable at all times. They want to get the best price. They gap through prices to elicit fear or to elicit excitement, period. That is why gaps exist. Everybody can give you the rigmarole on how it happens, why it happens, and so on and so forth. And that's not why it works that way. That's exactly why it works that way, is to elicit emotional responses, as most things in life are, right? It's why the candy bars are at the front aisle in a grocery store. It's why listen, I don't have to get into how marketing works, and I don't have to get into how life works. That's why you test drive a car before you buy it every single time. That's why they want you to smell the leather. They want you to hear the engine roar. The same thing with this. This is no different. It's a business based on human beings. You can see that there's a price target on the NASDAQ, which is way down at 378. All right. Now, how far is that? I think we hit 423 here. That's 50 points. That's another 15% down from where we sat at this low. Do I think we're going there right now? Right now, it doesn't appear so, but I will tell you this. Traditionally, when you pull off from a high very quickly as a method of producing fear rapidly, you would expect the rise up to fill all the gaps. In this case, we had a gap up at 490. We didn't quite make it there. We made it to about 486. So you came within under 1%. That, effectively, that is a fill. Now, when this happens, do you usually break this low? Not typically. If when you come back down, you start to see volume dry up. All right. Is volume drying up right now? Well, I hate to be the bearer of bad news, but no, volume was increasing yesterday. Okay. If we see volume continue to increase as we approach this low, that means there is more supply, more stock to be purchased before we rally to a higher price. If volume begins to dry up as we get down into this area, somewhere between 450 and 423 or 425, whatever it is, and volume begins to dry up, then yes, we should take off immediately. The possibility does exist to break this low. If we break this low, the first stop would be your 413. Your next stop would, in fact, be your 478. So there's some downside bias in the index right now. So let's go back to Google. Let's keep that in mind, that there is some downside bias. And let's go back to Google. Google has not really recovered since the drop. It is back at the lows. It has almost gone through its lows, which means there is an extremely high probability that Google's next stop is going to be right here. Call it 145. All right. Now, what we want to determine is when. So now we kind of see a price target. When should we be looking at that price target? That's the key, right? That's what everyone wants to know. When? Okay, so we have a price target. For those of you out there that play long term, going short and creating or building into a long to this point may not be a mistake if you believe this has long-term legs. The way you would know that is to zoom out even further, which would be a weekly chart. Does this look like it has long-term legs? Well, it's revisiting the high, which sits here at 150. Isn't that interesting that it's at 150 when we have a gap just below there at 145, which would bring you back into the previous high? Do I think Google has legs? I would say Google has legs, yes. So could you be building into that position of 145 right now? I don't see why not, as long as that was suitable for you, and you should know if it's suitable for you, right? I can't tell you if that makes sense for you. Now, when should you hit that 145? Well, we're on a 4-hour chart right now, right? So this takes you out about 3 months. You have a 1-hour chart here. And on this 1 hour chart, you have some price action above you at 183. So now you have a definable position for the next 4 to 6 weeks with a high of 183 and a low of 145. So now you know how to play this position both ways, right? So you can build into both positions. We zoom in a little more, all of a sudden that 183 disappeared. So if you zoom into a 30-minute, which would be over the next month, what do you see? Is there anything definable? Nothing that I see. Let's zoom into a 15. Anything definable here? Is there anything here telling you that it looks like we're headed for a market bounce? I would say we already know we're at the previous low. And I would say some volume stepping in, trading activity. Would I say that this is trading activity that would be associated with institutions? It certainly does not look like it. It doesn't look like institutional trading. But it could be. This could be they could be scaling into this, starting at 160 down to 145. They know what they're doing. They're not stupid. Is this a definable upside target? 165. Sure it is. It's a definable target. You can say you have a definable target of 165. Now you can see how we understand where we're headed, right? So we have downside at 145. That looks like it's going to happen within the next 3 months, or that's our longer term target. Our shorter term target might be 165. Then you'll evaluate what it looks like at that point. But above that, I believe it was 183. And you go up and up and up. Okay. But Google right now, is this something that I would play? If I were looking out a little further, did I say I could see it at one? No. If I were looking out 4 to 6 weeks, I would say yes. You can build into your 145 and your 183 100% from here. You're at 160. All right, what's next? Where are we here? NVIDIA, Meta. And let's look at Tesla and Apple. Let us look at Tesla and Apple. Whoop, I almost spelled Tesla. All right, do we see anything here? Let me get rid of that drawing there. This is on the monthly. This is the 75% drop from 2021 because, again, the market is a business that has a foundation to it, which are companies, right? Investment houses, brokerage firms, trading desks, institutional traders, retail traders, and you have to profit every single day. Those people, aside from retail traders for the most part, operate on mechanics. Those mechanics elicit emotional responses from retail, which will drive prices based on cash flow. And that is exactly what happened in Tesla. And that is really what happens in most stocks. Okay, let's keep zooming here. So we know we have downside bias on the NASDAQ. Let's see what we see. So this is a gap down, it fills. This is a gap down, it fills. This is a gap up, it fills. Now, 2 gap ups, they fill, but this didn't fill. This didn't fill up here. Call it 240. Call it 245 even. This didn't fill. Right there. We're on a daily. Let's zoom in. I mean, you could argue that this gap has filled, but if you look at Tesla, the fact of the matter is it tends to fill gaps like legitimately. Although there's a gap up here that you still haven't returned to. So you have a 145 downside too, everyone. And you have a lot of volume at a high price. And you have 145 on your downside. What does high volume traditionally mean when you're sitting at a higher price? It means downside. But you went from 270 down to 185. I mean, look, you dropped $85. You dropped 30%, more than 30% from here. So you have upside of call 245. You have downside of 145. Let's zoom into the 1 hour and see what we see. 245. 145's disappeared. But you want to take note of it. You want to acknowledge that its existence. You have a gap filled. You have a gap up filled. You see this the reason Tesla is moving in the manner that it is, and it's filling its gaps appropriately, is because this has massive institutional traders in it. Massive. They want to get the best price. I mean, down to the penny on their position within their trading desk. But you're getting high volumes at this high price, 218. If you were asking me, it would be looking to me like the bias is to the downside, but there's nothing really definable here that I would say, oh, I would do this with Tesla or I would do that. So I'm not going to do that right now. There's really no reason to. Where are we at? So we're going to do Apple. Let's take a look at Apple. The fact of the matter is, if you see downside bias in the NASDAQ and you're looking at these stocks, you're probably going to see downside bias. I mean, that's the way it goes. But what you're really looking for is being able to manage risk so that you can manage cash. See, this has a downside. Apple has downside of about 200 at this moment. And you're at 218. So you have 9% downside. Look how it fills its gaps. Did this gap down here fill? No, this is sitting at 170. Let's zoom in a little bit more. Yeah, that gap's still going to fill, everyone. Don't fool yourself. This gap for May is still going to fill. You have a gap here, fills, comes to a new high. This actually filled its high gap. Remember how the NASDAQ didn't make it to, the QQQ didn't make it to 490? It didn't make it to fill the gap? Well, Apple did. Apple's filling its gaps very, very, very appropriately. Again, it's a big player right now for institutions. Yeah, there's some real weakness here. I mean, there's no doubt about that. Even small gaps are filling. I mean, tiny. Look at this. That's nothing. Look at this. This is nothing. Yeah, they're all filling. We may have a surprise coming into the end of the year. I don't believe it's going to be September, though. The charts I'm looking at don't show a lot of negative action for the month of September, but definitely inside the next 3 months. I mean, when you look at a 4-hour chart, everybody, this chart right here, this is a 3-month chart. You're forecasting out 3 months with this, and I got to tell you, your upside is nothing. 236. Wait, let me just delete that. Your upside is nothing. That's your downside target. This is your upside target. In fact, I'm going to write that. Apple upside target. Now I'll come back and change that. Apple downside target. This is what is that? 175. 175. And this is 230, call it 237. 237. Change this to blue. I don't want it to be confusing here. Now, how you're building into this position, once again, depends on you. What is your risk profile? How much risk do you take? How much cash do you have on hand? How much cash do you keep on hand? Right? This information while very, very accurate, doesn't mean much if you don't know how to use it. Whoop. Upside. Downside. And what I teach here is how to use the information, right? That is the point. How to use the information. So you're sitting at 220, your upside's 237, your downside's 175. And this is, let's change the color altogether. What about this color? Does that look good? That's not very bright. Let's do that. Purple, purple. And this is a three month forecasting chart. Now, how do you use that? Well, that depends on you. But this is how you establish a real position. You're going to scale into this in two directions, potentially. One direction, possibly, depends on you. You might also be using some derivatives for one of the directions. We saw a bias in the underlying index. We've seen downside bias in the underlying index. We've seen downside bias in the other major stocks within this index. So it's really on you on how you use that information. So again, let me go over here. Where is this? Oh, who cares? I'm just going to show it all. Show. Where am I? There we go. If you're not following me on Twitter, it's at Derek Invests. I post a lot of charts. I post a lot more information there. Follow me there. That's on Twitter, at Derek Invests. LinkedIn is Honest-Trader. I am also on Twitch. I am also on Daily Motion, YouTube. I'm on everything. Instagram, Facebook. Even though you heard me say what I said about Meta, I believe what I said. But anyway, follow me there. Definitely head on over to Twitter at the very least. That way you can learn more. There's more information there, more information utilized. One-on-one coaching, email me at dmiller@prometheaninvesting.com. Leave your name, your phone number, your email, and where you live so I can look up your time zone and we can figure out a time to talk. All right, that's it for today. Thank you so much for joining me. Remember, if you're not good up here, you're not good anywhere. If you're not feeling good today, don't worry. You know why? You're batting 1,000. You've never lost. How do I know that? Because you're still here. If you're having a hard time, get out in the sun, go for a walk. Put a stupid smile on your face for an hour, and it'll start to take hold. I promise you. Fake it till you make it if you're not feeling good. It will work. Thank you so much for joining me. I appreciate everybody and all of you out there. Remember, every day above ground's a good day, and I will see you all